Hey everybody, welcome to Investing in Cannabis. I'm your host, Brandon David. As always, great show this week. We have Colton of Flourish Software, one of the leading ERP seed to sale tracking softwares in the hemp and cannabis industry. It's a really great episode, guys. We go deep on how he started his company on a product first principle. It's all about the user experience, sales, marketing, everything comes after just the quality of the product. He also is super open about his sort of trials and tribulations with raising money. He's currently raising around during the Corona lockdown. We get into what kind of craziness that is. Overall, he's super open and honest about all the ups and downs of being an entrepreneur, and it's one of my favorite episodes. He's a great guest, at least in the remote period. It's been one of my favorites. I learned a ton, guys. You're going to learn a ton. Tune in, listen up, get acquainted.
Colton, thanks for joining us. So great to have you.
Thanks for having me. I'm excited to be on today.
Yeah, for sure. Remote, but we're going to have a good time nonetheless. First of all, just how's your quarantine going? How's the new normal?
I can't complain. Getting a lot of work done. Thankful for really good internet, and the weather's been nice. And it's business as normal as it can be. So I think we've adapted well over the last couple months, and yeah.
Well, that's one of the beautiful things about having a software business. But let's just start at the beginning.
Yes, it is.
What is Flourish Software?
So we're a software platform built specifically for cannabis and hemp. We're a complete supply chain management platform servicing cultivation, manufacturing, distribution, and retail point of sale. We help our customers manage all their inventory, the purchasing, the order fulfillment, and cultivation, tracking the plants through life cycle. And it's been a lot of fun building this company, and it's what we do every day.
Got it. So a number of other competitors out there, obviously. A number have been on this show. I'm sure more will be in the future. What's the competitive advantage here? I mean, kind of how do you pitch this to someone that gets inundated, a cultivator that gets inundated with this kind of stuff?
Yeah, there's probably a few too many options on the market right now.
Yeah.
It's a crowded space. So, I think we're a product first company and backed up by years of supply chain domain expertise. Our customers rave about, the features and functionality that, we're constantly deploying new stuff every other week. But then really the delivery and support that comes along with the platform is where, I think that we bring a lot of domain expertise into how to best set up your operation and best use technology in conjunction with your operation. And the product, a lot of customers say we're in the top three as soon as they see it. I think we've designed something that's aesthetically pleasing, but also like very feature rich.
Got it. And where did that sort of design principles come from? I mean, that's a big part of software, right? The actual back end of these things is like kind of repeatable, right? It's more of the consumer experience, no? Consumers at work, I guess.
Well, the experience is everything because, I put myself in our customer's shoes of somebody that's sitting here at their computer interacting with the software for as much as they need to during the day, but, not an insignificant amount of time. So, we do spend a lot of time thinking about the design and the interaction and the clicks to achieve it. But really, the architecture and the backbone of the software itself, the core table structures and, design of the platform is that solid foundation is critical. So without a solid foundation, for a platform, it's hard to grow and scale correctly. And that's where we've seen some competitors struggle when they go to site 2 and site 3. And we've, been able to really deploy in a multi-site, multi-state environment very comfortably because our architecture is really well thought out on the back end.
Got it. And that comes from your experience building software previously to this. I mean, I was looking at your background without boring anybody too much. You had a lot of experience doing this specifically. So.
Yeah, specifically, we spent years implementing and supporting enterprise software at like dozens of very large companies across the country. I think I've been part of, close to 200 software implementations, over my career. Ranging from smaller warehouses to very huge 1 million+ square feet warehouses to manufacturing operations, transportation networks. So we had a lot of exposure to, I think, best-in-class software and a lot of different flavors of how that software was implemented and used by operators across the country outside of cannabis. And then when we got into cannabis, even our first couple customers were pretty different from each other. And so we've really taken a collaborative approach about like understanding and working with the customer to truly dial software in and design things that are, meeting the business needs of what our customer is.
And you've been able to grow pretty significantly. You're in 15 states now. Offices, Atlanta, Oregon, LA. I mean, a pretty good sized footprint for a company that's only a couple years old, right? 2-3 years old.
It's been crazy. It's amazing to think about, 3 years ago, or there's really just three of us, like trying to make this work. I think actually 3 years ago, I think our first client went dark on us for a couple of weeks, as everyone does in the cannabis industry. And, we were like, just really hacking it together. I mean, we hadn't even named Flourish yet. We've grown, I think, intelligently, but, significantly over the last couple of years, and have a really amazing team. We're comfortable with the distributed office and distributed workforce. And it's been really cool deploying this. Every new state, every new type of customer is a new set of learning, that gets rolled back into their overall platform, and it's been fun.
What size cultivation or customer is best fit for Flourish?
So, our customers literally range from 5-person operations to 200-person manufacturing plants. It can be anywhere in between. We've designed the software for an enterprise type scale operator, but a smaller operator can get plenty of value out of it and only adopt what they need of the software. We don't really force a lot of, heavy, there's a lot of functionality that you can optionally use, and it still works on its own. So, a single mom and pop operator, like, if it's 1 or 2 people, like doing a couple plants here and there, it's not really probably a fit. But when you get that 5-10 person company, really kind of 10 to 50 is kind of that mid-sized operation. It's kind of a sweet spot for us. And then we can scale up, to some of the largest players in the market.
How educated are your customers? I'm sure it ranges, but have most of your customers purchased a different seed to sale at this point and been fed up and come to you, or are you sort of originating these people?
So it's the beauty of being a new market that's really rapidly expanding. I'd say about 30% of our clients are just brand new operations. So we're the first thing they brought in. 30% of our clients we've taken from a competitor, and we've migrated, a customer from basically every competitor on the market. And then, about 30% of folks that kind of got up and running, are using spreadsheets and now looking at software for the first time. So it is sort of, it's not 100% evenly split, but it's pretty divided between those 3 categories. And it's the background as far as comfort level with technology. We do find that our most successful customers, do have some familiarity with using technology. It's just, they know what they're wanting to get out of the software, and makes it a lot easier for them to adopt and adapt it and really champion those projects. But, it ranges from folks that have never barely turned on a computer for work to people that have, spent decades deploying this type of software in much more complex environments, and now are on their 2nd or 3rd career, and that happens to be in cannabis. So it's that's kind of the beauty of the industry itself, is that it draws people from all corners of industry, really.
Yeah, I mean, often a software's biggest competitors like Google Sheets, right?
That is definitely the pen and paper, and Google spreadsheets are definitely kind of our probably number 1 competitor. But at some point it becomes challenging to truly scale and operate the business with, a patchwork of just spreadsheets with no controls and no, dual data integrity. And, there's lots of, it's amazing how you can just easily add a column to a spreadsheet with really no coding changes, but to software, it's obviously a little bit different. So that is a learning curve sometimes for folks. And, we've had some people that, have sat on the decision to implement software for, months on end because of a feature and kind of missing the forest for the trees. Like when it's eventually people are ready for this, to really take the business to the next level and give them a lot more comfort and peace of mind that something's truly there to help them drive the process and manage it.
Got it. So when you have people sort of jump ship and switch, I guess a couple questions. One is, what's the biggest reason that they tell you? I mean, why are they switching from their existing situation, their existing provider?
So, in the cannabis world, metric is the bane of most operators' existence, and I think a huge challenge. I feel like we could have cured cancer with the amount of work we've done to engineer around metrics deficiencies. It's funny. So, honestly, a lot of our customers, come like those who switch over to us from a competitor, it's mostly around functionality, and then coupled with the support. So, something they were sold that didn't really perform like as expected, or, like the inventory isn't, correct, right? Bugs and just really significant core issues to the functionality of the software. Sometimes it's, some usability, and then coupled with typically like some failures in support. So not feeling like they're getting the attention they need to work through those problems. And then, sometimes it is like specific feature sets. Like when we, a number of our competitors have caught up to us now, but like even a year and a half ago, a good number of players in this space were not even tracking the non-cannabis inventory in the inventory management system. And, that was one reason why people would want to switch over to us to get a more holistic picture of what's actually happening in their business.
Mm-hmm. Got it. Besides the fact that there's a low barrier to entry, relatively low,
Mm-hmm.
why are there so many competitors out there?
I mean, this is the hottest, most sexy space, in anywhere right now to be working in. So, I think it's a fragmented market. Every state has its own nuance. And so, with that market fragmentation, that sort of, there's some operators that, or some software companies that came out of just the Washington market, for instance, or, or just in the Illinois market, or, just in California alone, right? Like it's a fragmented market with all the different nuances and details there. It's exciting. There's, tech is interested in cannabis. I think it's just, and it's fast, it's growing very, very quickly. So, kind of the reasons, yeah.
Yeah. Interesting. Yeah. It is. It's trendy. It's sexy. I started this show in 2015. It wasn't as sexy then, but it is kind of interesting. Of all things, like I could see why people would want to grow, right?
Yeah.
Like that sounds fun, but like to start a seed to sale ERP company is not like something you just do. Like I don't know. Clearly you have a strong background in it. That's why it's interesting.
And for us, it was, it was all around timing. Like we, like having a passion for the topic and the industry, and and even hemp, so we do a significant amount of business in the hemp space, which has really exploded over the last year and a half. I can think of 15 years ago, I thought like, wow, why are we not growing hemp and using it for all these things? Like this is absolutely ridiculous, and it was like we could just, like there was this whole thought around like building an industry and empire around this, the plant and all you could do with it, and then regulatory wise, there's no way to do that, right? And so 15 years later, here, the Farm Bill passes, and thousands of businesses spring up overnight, and and we've already built the software for cannabis, and then we expanded out into hemp, and we're in the middle of it all, right? And it's all brand new and very chaotic, and it was really exciting. And coming from like more of a legacy enterprise background, there was this vision of deploying a platform, right? Like one platform to truly run the business end to end, or have visibility across the business end to end. But typically in a lot of, established industries, there's 20, 30 years of legacy technology and people and processes married to that you can't just build this. It's much easier said than done. And what's been really cool here is like being able to build a piece of software and deploy it end to end, and then really see it be successful and grow with the industry as it's growing up, and just trying to design, and think past like that sort of legacy issues that are out there around connecting systems. And and true visibility. So
Got it.
figured out about this.
Makes sense. Give me some other sort of points of traction here. What are the KPIs? What metrics do you look at every day? What's a good indicator of your scale, I suppose?
So, I mean, obviously we look at top line growth and then retention. So, as a SaaS company, that's how we're valued on, that's what, we're always tracking towards like our burn and how close we are to profitability. And so, it's line in sight for us, which is great. I mean, we've, never lost sort of vision of the fact that we are a business to eventually generate profit. But in SaaS, there's a pretty big investment to both build the tech and also acquire customers. So, I track all the classic SaaS metrics around growth, retention, cost of acquiring the customer versus the lifetime value of it, just sort of a function of the churn and and what they pay. So, and then, past that, we look a lot at just like product adoption. So, I would say we've worked really closely with, our customers, at this stage, we're still, relatively early stage, to understand, how the product is driving, is being adopted by our customers and also driving value. And we're like just constantly asking that question. What is it we're not solving? How well are we solving what we are solving? How do we make that a little bit better, a little bit faster? And we're like very product minded in how we engage with the customer.
Do you have an example you can share? What are you not building that you're thinking about building? We
have, like when I say we have, 1,000 things on our product roadmap, I mean, it's probably an understatement. I mean, we've it's a pretty wide product. So we have, we maintain a product roadmap pretty much per persona. So cultivator, finance, purchasing, fulfillment, inventory management. We have a large set of integrations we're working on. We just deployed our LeafLink integration, which is like awesome and seamless. And, we're running to repeat that with a couple other marketplaces on the in the industry.
I can ask the question differently if you want. Yeah. I mean, I'm sure that the ice box is full, but
so much.
But is there a segment of the cannabis industry, whether you would tackle it or not, mm-hmm. that you think could be very profitable that's not yet being built for or adequately built for, I suppose?
So, one of the big missions we have right now is around that sort of sales enablement. It's amazing how, even though there's really good marketplaces on the market, like LeafLink, LeafTrade, Apex, I think Confident Cannabis has one. There's another 3 or 4 others out there. That there's still a lot of friction in the market around just transacting business. I mean, your clients that sit there on the phone all day, just cold calling people trying to source biomass or sell oil or, and like there's a lot of manual, back and forth. And so we have a whole set of development initiatives just around like making that more seamless, right? So that's, I think, an area in which, despite there being a lot of investment, you still feel the pains of it being an early market without established supply chains, established, SOPs, communication protocols, like naming standards, right? Like it's just not even like a set of like clear standards around some of the stuff that.
Yep. Yeah, probably people are using some botched version of like Salesforce or whatever for sales enablement outside of, there's no cannabis specific option, like you said.
Yeah, or 4 or 5 different things kind of hobbled together. So.
Yeah. Speaking of sort of big incumbents, how much do you think about the other huge ERP providers, deciding they want to do something like this, or at least part of what you do?
So, I think there's a lot of value in building something that's specific to the vertical, right? There's a lot of workflows, screens, data elements, config options that are very, very native to what our customers do every single day. That lowers the time to implement and the time, to really adopt, and is more intuitive to adopt, right? We're not receiving plants into a flower room via a purchase order and some sort of hack together, set of workflows that takes you 18 clicks to do, right? So there's that sort of moat that, we're really focused on, and we've been focused on since, day one, right? We said we have to build a product. If we're building this, we have to build a product that's relevant past compliance, and it has to have enough value that's specific to the target customer we're targeting, so that, off-the-shelf ERP could always try to do that job, but the cost and pain of doing it is going to, like our value prop is going to outweigh that cost. So that's one of the ways we think about it. Another way to think about it is just partnerships. So, recognizing that there's a lot of good financial packages out there, that these ERPs can be deployed to just handle like financials and HR and, some back of house functions that aren't relevant to the operation, and we can be that best of breed supply chain management, supply chain execution system and tie into that. And there's lots of examples in the market, like where I started my career, Manhattan Associates, which is, $1 billion company. And, they just do best of breed specific supply chain software around warehousing and transportation or fulfillment, and that's really where I position us to be, is like, we're what those operators need day to day to run the business. And then we can hook into QuickBooks, or when you're ready to outgrow QuickBooks, like Sage Intacct or NetSuite. And for us, like, your operation's not going to change, but we can hook into a different financials package on the back end, and some of these other ERP players, we can play well with them.
Aside from the integrations, which are always really important in any software, do you look at these bigger companies as potential acquirers? I mean, flash forward a little bit here. Like, you want to be a big, sustainable public company, or are you going to get bought and cash out here? Not that one is worse than the other. I mean, both good options.
They're both good options. I think, as like, for the type of company we're building, a strategic acquirer that wants to come in and add us to their portfolio makes a lot of sense. They're also, could potentially make a lot of sense to partner with, a finance partner to go and do a roll up and, have us be at the ecosystem there and to grow into something that looks like a NetSuite, which eventually got bought by Oracle anyway. Or going public is always an option, right? But in this, like, it's just way too early. Until you're.
Well, it hasn't been early for a lot of your competitors.
The cost of going public. I mean, there's a lot of, I think, some short-term appeal to it, but yeah, I mean, like, it's, there's a lot of things that tell you when it's appropriate to go public.
Yep.
We're not taking any of those options off the table. I think, the near-term focus is just continuing to acquire customers and, build a long-term sustainable business. And then whichever option sort of unfolds, as, the market unfolds and changes in front of us, we'll adapt to that.
Well, you must be in a very good position and pretty close to profitable, because I'm looking at how much money you've raised over the last couple of years, and it's not that much. I mean, congratulations. Like, you've only taken on 3.5, something like that. I mean, that's pretty impressive.
It's, I think we've had a bootstrapping mentality from the beginning. We self-funded this operation for around a year, working on sort of an analytics platform for distribution centers. And we pivoted into cannabis, and really, didn't take a check except for, until the end of that year. So we've never lost sight of, what it means to take capital on and how to spend it wisely to, sort of drive value. So yeah, I feel like it's been fun. It's never, we never just had tons of extra money laying around to spend on, frivolous stuff, but it's kept us focused and, and really, with the eye on the prize here of just building a profitable business.
Do you think that core philosophy comes from you working and being from the South originally? Because I spent 9 years in San Francisco doing the tech hustle, and basically it's raise as much as you can and get a big headline, and it's just so different from the way that you're running your company.
I don't think we've ever thought of ourselves as just a startup. I think we've thought of ourselves as a business, and we've taken venture, capital to help fund business initiatives, hiring and investing into, the product and growth and does it make sense? But yeah, that's a good question. I've never thought about it in those terms. I think maybe there are some cultural things there around, uncomfortableness around taking money, or the, sort of pull yourself up by your own bootstraps sort of mentality that comes out of, some cultural background there. Yeah, I've not thought about that question. That's a good one.
Yeah, well, I think it's particularly interesting in this time that we're in right now, and I want to shift a little bit to Corona and COVID and sort of like what the new normal looks like for you guys. Thankfully, as we talked about at the top, like selling software isn't that different,
Yes.
presumably, but you are raising this 1.5 million. Which it looks like you got more than a majority committed. Talk about raising right now. Kind of.
Well, let's just say I'm really thankful I started like almost 6 months ago.
Got
I'm
it.
also really surprised that 6 months in, we still haven't, closed all this up. Everything, my biggest, I think, learning experience when it comes to capital raise is that you read a blog or you listen to a podcast and you think, oh, you just put a deck together and seed, Series A, Series B, Series C, and it just all sort of magically waterfalls together and it's nice and tight and clean. And it's just like in my experience, and I don't think this is uncommon, it's just not true. There's people and, in a lot of minutia and details and a lot of work that goes into every, tranche and check, funding and check that comes in. From a like sort of a COVID sort of adjustment, like I said, it's been pretty easy for us to go 100% remote. And, because we were already semi-remote anyway, and it's software, so we're, super privileged to just be able to use technology in a good way. And we built a lot of internal processes, from the beginning that help us, with communication and controls and workflow, and, we're set up for this. So that's not been as challenging. And, we do like spending time on site with our clients for implementation. So, we're not doing that, but hey, it just means we're actually knocking out implementations faster and, 100% remote. And
it's probably forced you to make the implementation more intuitive, right? If they have to do it all on their side.
And then, just continue to beef up help docs and training documentation and videos and stuff like that. And fortunately, Zoom and all this, there's a lot of ways to collaborate digitally. Mm-hmm. From a funding perspective, some money that was committed maybe 2 months ago sort of dropped out or partially dropped out or, is on the fence as we're trying to get this thing, dialed in and all the terms buttoned up and closed. So, there's sort of some of that that's gone on. And, obviously like any venture capital, fund was pretty distracted. Especially the first, 3 or 4 weeks of all this, just with portfolio companies, trying to reset and emergency board meetings and are we running out of cash? What do we do? So, it sort of stymied any, new outreach. But, I think, coming into, this month and a half into it or so, people are sort of starting to adjust to some of the new normal and, it's the conversations are all still happening and, people that have funds that have money, like still have the capital, right? There just means, thoughtful about how they deploy it and also saving some for other portfolio companies that might need it earlier than expected.
Totally. And you're raising $1.5 million. Are you calling this a bridge or talk to me about the strategy there a little bit?
So we're calling this, yes, the next set of financing. So
is that a dirty word? Should I not have said that?
No, it's not, and it's funny, right? So we raised, some safe notes early on that converted into $1 million strategic sort of seed. And even when we get through that million, we anticipated doing 2. It took a whole nother year. We got it to the finish line. It fell through due to just various external factors, and and then last year we raised 2.2, so we were a little oversubscribed. So we basically spent a year trying to raise an additional $1 million. It all fell through. We did a hard reset. We came back, we raised that at a higher valuation, and we ended up doing 2 instead of 1. And it was a little oversubscribed, so it turned out better than expected, even though there was a dark period there.
Stressful.
Ups and downs of being an entrepreneur, and then we'd anticipated raising another tranche this year. So we've spent kind of the last 6 months kind of prepping for that and starting the formal process and going out to the market and getting this done. The COVID stuff definitely slowed stuff down, I would say, by 2 months now almost, just in additional due diligence and response times and, just everything is taking it feels like a day or two or a week longer than it should be, just from everyone's attention. So this is, right now we're instead of raising a price round, we're just going to do some convertible debt to convert into, what will eventually be a larger round. And that's kind of what we're working on right now. It's just sort of fine tuning the details of that, conversion triggers, and then getting these checks in the door. So feel good about where it's at. Most of this money is committed. Like I said, about 60% like verbally committed, and there's another set of checks that are investors that like we just haven't really pushed over the finish line because we're working on ironing out the final details to it. So sequencing is everything in the fundraising process. Clear lines of communication. And you do have to run it as a process, and there's a lot of different parties. Internally, the board, your existing investors, the new investors that are professional VCs, new investors that are more family office or just high net worth individuals writing more of a personal check. So there's a lot of I've definitely learned a lot about like how to balance all those interest and how to try to manage the communication between them all and run it. But yeah, it's never a cut and dry process, and it always takes a little longer than expected to get done. But I'm thankful that we have good backers right now, and we're like at the finish line to get this thing done.
Well, it's an incredible experience. This certainly won't be the last company you raise money for. I can tell you that. So yeah.
Comes with the territory.
Comes with the territory. Exactly. So we talked a little bit about possible acquisitions. My friend Pranav of Trellis, so we go back to the Gateway days, sold his company to Akerna pretty recently. That was announced. Does that sort of, I have two questions. First, I know there's a funny story about the Tesla. So maybe we'll go there first. I have a funny note about that Tesla, which caused a lot of drama for a lot of investors. But you have a funny story about it too. Go ahead.
I do. Well, Trellis was like kind of our number one competitor for, the first 2 years or so of doing this, right? So they raised before us. And it's funny, like so, they raised a couple $1 million and, they bought these Teslas for their customer support vehicles, and they were on front and center on their website. We had a couple guys that were going to write a first check in to our company as a safe note. And one of them was at a VC. He was writing a personal check, but he's in a VC firm, and pulled up the website and showed them our number one competitor. And he was like, "What are these Teslas?" He's like, "Oh, well, they bought Teslas for their support fleet." He was like, "Okay, I think we can do this. You guys are probably in a good spot." And it really helped us close that first check.
That's amazing.
And get some of the first money in the company. So
Pranav would like that story too. By the way, he would.
It's funny because obviously you want to establish marketing and branding is super important, and and did they buy a Tesla? Probably not. They probably leased it, but optics can be interpreted different ways by different folks. And
well, like I said, you're not the only person that I heard that from. A lot of investors, some involved, some not involved, that were like, "Yeah, that's a bad signal." That's a bad signal. But anyway, I mean, he did exit it, so congratulations to him. I don't know exactly what those terms are. Not sure I would say them anyway, but yeah.
It's not. I don't think we're. They did an all stock deal for essentially the same money they raised. So
yeah,
probably not where they wanted to land with the company at the end of the day. But
so what is that? I mean, obviously, you think you have a competitive advantage from the beginning. Otherwise, you wouldn't be doing this. But does that change your strategy or your outlook on the landscape that they had? Not a big exit. And what does that mean for you guys, I suppose?
Well, if you look at like Ample's, sold to MJ Freeway last year, or Akerna last year, and, Trellis selling this year, both of those acquisitions or exits were really more like rescue packages, from companies that ran out of money and needed a home to go to.
Yep.
So, I wouldn't say those were the outcome that the investors invested in.
Not at all. Not at all.
Founders either. And, I think we'll see consolidation in this industry, and we'll see people go out of business. I mean, it's sort of the nature being a startup, right? Like,
Yep.
you throw your hat in the ring, you go through the motions to build a business and try to make it work, and it doesn't always pan out, how you want it to. When I'm looking at like comparable exits or, like ways we could end, I'm probably looking outside of the industry at other vertically specific SaaS, companies that, have, done really well. Either as standalone companies for, a long time, or eventually going public, or, or been acquired. I mean, one of the companies I always look at that's just it's not supply chain, but, Viva Systems has had, amazing stock run and is built this amazing, multi-billion-dollar company, on, relatively small amount of money raised. And they were, originally just a CRM focused on life sciences. Right. And, they do a lot more now. And, but, there's a lot of companies out there that have parallels between, what we do and them that have been really successful.
Yeah, the other one that comes to mind that's really expanded a lot was Atlassian too, right? I mean, they started with a relatively narrow, it was just like HipChat for a long time, right? Which,
believe me, we spend a good amount of money on Atlassian products every month.
Yeah.
It's not a small investment, but it's core to running the business, and it really very product focused company, very very committed to to just delivering for the customer, like small sales and marketing spend, and pretty impressive. Yeah,
very impressive. I like that you're marking your goals not by other cannabis companies, because that's not going to work.
We feel good about where we sit in the market, and, a lot of confidence in the product, and we know that we're every day working hard to push out additional features and functionality to to make it better and better, and that's never going to end. It's sort of why people purchase SaaS, right? You don't download it and forget about it. Like, you get new updates and support through the life cycle of the business. And like our largest customer scaled from basically 50 employees to 2,000 employees in 18 months, right? We went from having one instance of our software deployed to 45 or 50 in like a year and a half. And we did a 30-store retail rollout when we launched our retail point of sale store with them. And like having a technology partner that can kind of work with you to do that, which is unheard of. It just doesn't happen in normal industry.
Let's shift gears a little bit. You have such a cool, like 30,000 foot view of the industry based on what you do. How do you stay informed? Is it from talking to customers? Is there something you read every day? Like, how do you stay informed?
So, yeah, I'm definitely a news junkie. I spend a lot of my time reading news, like industry and non-industry news. I think it's just important to understand what's happening on, in the world. So you like I think probably the MJ Biz Daily, and I think Bazinga has great coverage, and a good number of other sort of just e-publications. We spend a ton of time just asking questions about customers, and like there's nothing I'd rather be doing than working with customers to help understand what they're doing and where they're going with their business and what they're seeing on the ground. Because the public companies are obviously shiny, and it's easy to cover them, but the percentage of this industry that's public is, I think, relatively small. So most of what's happening in the industry is private, and there's still a lot of the industry that's not even in the legal market. And trying to hear and understand, like, and just learning all these crazy stories of people managing that transition into it is pretty interesting. So just any information I can get my hands on, I'm always reading and diving into. So
good stuff. So I do this thing at the end of the show, which I stole from a show called Jesus and Miro, if you're familiar with that late night show. But anyway, like if you're at an all-night bodega or corner store, there's these neon signs that stay up forever, right? And if you had to have a neon sign above your head for the rest of your life, it's got to follow you around, what would your neon sign say?
Wow. Problem solver. So
problem solver. That's good. I like that. Business problems, or do like your friends call you for relationship advice too?
I'm always okay to talk through something, but I like to get my hands dirty and work on something. I mean, that's that's what my job is basically every day. Is it marketing? Is it sales? Is it product? Is it support? Something HR? Working with a client. Like, let's think through this. I mean, I have an industrial engineering degree. I went to school to learn better tools and ways to think through that stuff. I mean, yeah. I mean, I guess if I'm thinking it's like Sim City, like or not the Sim City, the Sims, right? Or
yeah,
like
the Sims, yeah.
Yeah, like that.
I love that. I love that answer. That's a great answer. Well, I think that's as good a place to wrap up as any. How can we help you? Are you hiring for anything by chance? How can the audience help you guys?
So, like, we're always looking for good talent. We have a pretty lean staff, and when we get this raise done, we'll have some budget to hire a couple more folks. So,
what would you like to hire? What's the number one thing you'd like to hire?
We will most likely double this company over the next 12 to 18 months headcount, and that means adding talented folks in pretty much every department. Mm-hmm. So, I mean, it's hard for me to answer, what the most immediate
is
today. I mean, we're always looking for good developers. It's, it can be very challenging to find. Of course, like, we just went from full employment to significant unemployment. So there's probably a bigger talent pool right now available to look at.
Yep.
Client folks that like to work with people to get things installed. It's across the board. We'll be adding headcount.
You're going to add everything. Yeah. Good stuff. That's a good problem to have. Well, Colton, you've been so open and honest. It's been great, man. Thanks for joining us.
Thank you for having me. I really appreciate it. And, it's always cool to get on and talk about the company and, share some stuff about building this business. It's been fun.
Yeah, absolutely. Well, thanks again for joining us, man.
Thanks, Brandon.